Hey guys, this is another look at ZB. Starting at left is the weekly log scale chart. On the right is 30-year yield, also on the weekly time frame. And we had a major technical development this week. We broke the series of measured move shorts on the 30-year yield. Uh, this data is delayed, and I'm not seeing a print from Friday, but we broke it, and it looks like we may have back tested it, and then depending on where Friday's print is continued. Price did the same. It back tested this stealth fib support zone here before continuing lower. So I would expect yields to sort of mirror that. And so, you know, what this looks like, yields since 2011 have been going down in a series that's been very technical, with the exception of this overthrow here, which was capturing a counter trend long 236 target to the tick. And so I think this break is significant. Can it be a fake out or an overthrow or a false break? Yeah, sure, I suppose. But because yields have been so technical, I think that this break will stick and that yields are going, the 30-year yield is going to 279. And so then and only then, assuming yields continue, will I think about buying ZB. There's no sense in trying to catch that falling knife until 30-year yield gets to where it wants to go. And so while I'm on this chart, if I switch to the monthly time frame, the Fed funds rate gets one print a month, and so it's only visible on the monthly chart here. It's this red line. And, there's a lot of chatter about, oh, well, when the rate hike cycle begins, yields go down. And as evidence, you can look at the beginning of this cycle here. Rates fell for about 8 months, and then they went back to highs, and then they went down for shallow for about a year while rates were increasing. And then during this cycle here, which started right here, that was a perfect top in rates, and rates went down for a year for the first half of this cycle. But if you go back before that, here rates are going up and yields are going up at the same time. Yields actually top before rates about halfway through the cycle here. And then here, yields and rates are going up together. And again, yields top before rates, this time probably about 3/4 of the way through the cycle. And then here's an example of rates going up and yields turning into a choppy sideways mess. So you have every possible combination. I don't see a lot of advantage in thinking that yields will go down now simply because rates are going up. It seems like a coin toss to me, so I just wanted to point that out. Could it be priced in? Could we be having a fake out? Sure, but I'm simply trading the setup that is working right now, which is rates going to this target. Is that everything I wanted to say on this chart? Yeah. And so in the previous video, we talked about that series of measured move shorts on yields looking like a 5-wave move into lows. And the inverse of that on price is that, starting here in 2011, um, it looks like a series of 3-wave moves into this high right here. So it could easily be 3 up, 3 down, 3 up, 3 down, 3 up. And that is, with the 1 and the 4 overlap, is an ending diagonal, which is a terminal pattern, which is just another reason to think that this blow off here could be a secular top. And to help confirm that, again, we're looking for 5 waves down, and we're well on our way. This would be a 1 down, an A, B, C into a 2, a 3 down, the 4th wave triangle, and now we're on a 1, 2, 3, and then we'll need a 4 and 5. And this has certainly felt like the relentless nature of a third wave. Um, is that everything I want to say on this chart? Yeah. And so just remember that at this most recent high, we had a 12-point overthrow of this channel, which was sort of the equivalent of this previous. And so, I don't think the market is concerned about stopping at the bottom of this channel. And we could easily have a 12-point underthrow in this direction, if not more. So we had sort of a feeble reaction to this channel this week. And so if we go to the prices, I mean, if we just look at the daily chart, when we touched that channel, well, I don't have it on this, so I need to look at all of it. We touched the channel here, and which is about 148, and we came into it in an extended condition. We were outside the lower weekly Bollinger Band, outside the lower daily Bollinger Band, and we were oversold here on the hourly chart. And so, yeah, a reaction made sense, and if you weren't short, that was a cute tactical long that was good for 2.5 points. And then we just immediately rolled over and kept selling, which is just a very muted reaction here. And I think that yields have a target higher and bonds have targets lower. The other important thing that happened technically this week is, and I'm looking at the weekly chart over here, we had this measured move short. Yes, it dipped in intraday, but we hit the 236 target and we spiked through it. So there is a potential for a lows to lows extension off of this pivot right here, which I've drawn on the daily chart. And if we spike this 618 level here at 148.30, we've seen many times it doesn't mean the setup is broken, right? We could spike it and then we could retest it and it can hold and we could continue. If this extension short doesn't hold, I would be looking to this previous low here as resistance. I mean, ideally, we wouldn't see price come back above, I think that's 150.11, more or less. So again, we're at a target. We tend to chop around on profit targets. We're extended, so we could do that for a week or two. And we're not oversold on the weekly or the daily time frame. So we have plenty of room to move lower and still have a bullish divergence relative to the bottom of the weekly third wave, which hit 20 on weekly RSI. And we are still only at 31.5. And so, I see no reason to buy here. There are, a lot of traders now talking about getting long bonds because sentiment is so negative, and we've been down for over 2 years. But just look at this wave right here. It's interesting because ZB paused at all of the logical support levels. Here it paused for 2 days at the long from lows that I thought might be a problem ahead of the FOMC, but it wasn't. And then it paused for 3 days back in this stealth fib support zone here before rolling over. And it paused for 2 days at this huge weekly long-term channel here before rolling over. And so, recognizing that this had the potential to be a third wave down is sort of a key to not stepping in front of the train. Third waves are, by definition, relentless. And I'm not going to try to count the structure in here because it's just vertical. but we might need a little fourth and a fifth wave for this wave here, and then we'll need a larger fourth and a fifth wave for this whole structure right here. So despite all of a lot of chatter about getting long bonds, I have no interest in catching this falling knife, and I won't be interested until yields capture their 236 target at the soonest. That is when I would consider getting long here. And I think that's it. All right, thanks guys.